Welcome to FAB Education's Finance for Non-Financial Managers program. Let's start at the beginning. Why would you bother to learn finance? Well, finance is the language of business, and you need it if you want to understand and discuss business decisions, budgets, and plans. This presentation provides basic information about financial statements, and it's designed to be used as part of the FAB Education Finance for Non-Financial Managers program. Now, the contents will cover the role of finance, the profit and loss account, how not to confuse profit and cash, the balance sheet, the power of ratios, and it will introduce our financial simulators, FAB Linker and FAB Assessor. Now, businesses conduct all kinds of transactions. This is finance speak for an action such as buying stock, selling goods, paying salaries, renting premises, and so on. And the role of finance is to make sense of all those transactions and answer two fundamental questions. Are we making a profit? And what is the overall financial position of the business? And it does this by funneling all the transactions into two statements or scorecards called the profit and loss account and the balance sheet. The profit and loss account, at its most basic, simply deducts costs from sales to derive profit, as in that example. But there are variations in presentation. The basic sequence is gross profit, trading profit, and then net profit, as you can see from the example. But sometimes net profit is further analysed into profit before interest and tax, profit before interest, tax, depreciation, and amortization, and the terms earnings or income may be used in place of profit. Overheads are often classified into operating expenses, admin expenses, selling expenses, or they may be listed individually such as rent, insurance, salaries, and so on. Different industries will have a different presentation to suit their activity. Service has no cost of sales, retail has, and manufacturing will break down the cost of sales into materials, wages, and direct expenses. The key points about the profit and loss account are that the values shown are cumulative for a period. It's prepared to show a true and fair picture of the business, so it includes only sales and costs that can be fairly matched to the period, called revenue items. Capital expenditure, for example, the purchase of plant and equipment, will be charged or phased over the useful life of the asset using a mechanism called depreciation. Use your glossary to understand these terms. Don't confuse profit and cash. There are a number of reasons why profit is different to cash, the main ones being timing. Sales and expenses in the profit and loss account are based on invoices, and the cash settlement will be later. Capital inflows, new share capital and new loans affect cash but not profit. And capital expenditure affects cash but not profit. Depreciation is a charge against profit but has no impact in cash. So you can see that the values of profit and cash will be very different. The balance sheet's content and structure. This is the conventional presentation. That was the old-fashioned left-hand, right-hand. Still very useful to show the five sections that every balance sheet will have: the owner's funds, long-term loans, current liabilities, and fixed assets and current assets. Terms may vary. Non-current asset now replaces fixed assets in some presentations, and the USA reverses the presentation. Assets are on the left-hand side. Key points about a balance sheet. It's a snapshot at a point in time. You'll remember the profit and loss is cumulative over time. The balance sheet is a snapshot. Current means 12 months or less. Non-current means greater than 12 months. It's based on historical values, and it's based on the premise that the business will continue as a going concern in the same activity. Use your glossary to understand the terms. The balance sheet tells the story of the business because it shows the net effect of the trading history of the business right up to the point where the balance sheet was prepared, leaving the net worth that the business is worth to the owners at this stage. It even opens the door to the future, showing us the ability of the business to pay its debts in the short term, i.e. the working capital that is available. But add ratios and the financial statements can tell us so much more. There is so much more to the story of a business than just its net worth or the absolute values of the assets, liabilities, revenues and expenses that we can read from the financial statements. The real joy of finance is exploring the answers to questions like, do we have enough money to pay our debts? Are we carrying more cash than we know what to do with? Do we risk losing control because we depend too much on borrowings? Or are we holding the business back by not borrowing for more rapid expansion? Are our profit margins high enough? Do we make use of the assets we employ in the business? Are we carrying too much stock? Do we collect money from our debtors effectively? And are we making enough return on the shareholders' investment to keep them from becoming disenchanted and seeking to replace us as managers? Adding a knowledge of finance to your existing skills will transform your understanding of business and your ability to contribute to decision making and problem solving. FabLinker will rocket boost your learning by putting all the pieces together on one screen so you can explore and practice until you've totally mastered the art of finance. And FabAssessor will let you apply it to your own company by exploring trends of ratios and valuations and exploring what ifs. Learn by doing. Thank you.